All right, guys. Remember I've mentioned yesterday that USA is shooting themselves? I have some really interesting numbers here because we just can't afford a real trade war with China. Okay, we can't afford. Well, US can't afford a real trade war with China. They're playing at the moment, but he can't afford. And he knows because now he came back and look at what he did and he's like, oh no, I really shouldn't be doing this. And the reason why he didn't implement tariffs on electronics, it's because of this. But before I tell you, please subscribe to the channel, give us a thumbs up on this video, and don't forget that every Tuesday, Wednesday and Thursday we do have webinars from 4 to 5 p.m. in Australia time. Now that you are subscribed and you probably have been into the Telegram group that is down at the description of this video. The link is on the description of the video. You can just join in there now. It's free. That's where I send the link for the webinar. Then we're ready to start. I don't want to be, too long here. I just want to put the real thing down, the real thing into your face. So you start to think about and try to understand that USA just lost this little trade war, as a lot of people are calling, even myself. 87% of iPhones are made in China. 80% of the iPads are made in China. 60% of MacBooks are made in China. 81% of all the smartphones, Android, Samsung, any of those other brands, imported to the US, they come from China. So even 78% of computer monitors, any brand, LG, Samsung, there's a bunch of other brands that you name it, and as well 76% of the toys for children, for little robots, little things for children are coming from China. So stop for a minute and think about, not even 50% is made into the US. Everything is coming from China. So basically, Trump trying to slap those heavy tariffs on China, what he's doing is you pretty much sending Apple into a chaos. You're sending Apple to failure. You're sending Nvidia for failure. You're sending LG for failure. All of those big companies, and this is triggering more inflation, more and more inflation. Okay, and basically, if you continue to do that, he's going to drive the prices up because the labor will be expensive. Of course, the brand, the Apple, won't hold the phone and say like, okay, now it's costing $1,000, was to be $400 for us. Now it's costing $1,600 more. I'm not going to take this loss. I'm going to put into the consumer. So this product that ended up to be $800 now is costing $1,200. Okay, so $400 more expensive than it was before. So basically, he's sending Apple and any other, brand into a chaos. And with that, he's raising the prices. And with that, he's making more inflation. So he's not helping the economy. I can't see where. Okay, so I think this inflation will start all over again. We had the Jerome Powell having his speech on 3 days ago or 4 days ago, saying that the Fed, when, I don't know if you guys remember, but last week, US President Trump said that the Fed should cut the rates. And then on a few days later, because he was thinking that, okay, we're going to have something from Jerome Powell, because I've just said that, he probably going to say something on his speech. When Jerome Powell came into his speech, he was like, nah, we're very stable where we're at. We're very prepared to receive any changes into the economy. We're going to barefoot here. We're going to wait for the data. We're going to wait for confluence, and then we're going to take some steps. But it doesn't mean that the Fed will cut. That's exactly what Jerome Powell said. Okay, so basically Trump failed on trying to put pressure into Jerome Powell because Jerome Powell doesn't care. Okay, And if Jerome Powell actually do cut, not only Jerome Powell, but the whole group, the FOMC group, start to cut interest rates, then inflation will creep higher and higher again because of the prices are going to be expensive for the end consumer. Okay, so I think there's a lot of things happening, and I guess that we are coming for a recession into US. I think not only me, but JP Morgan CEO David, I think is his name. He is predicting a negative 0.3% growth for the US on the first quarter. Okay, if you don't believe me, just search it up on Google, and the headline will be all over. Okay, so why all of these matters to us, to currency? Well, there's pretty much three reasons. When the US imports way more than it exports, that's a trade deficit, the dollars flow out. Okay. Second, if the tariffs make imports more expensive, it can push, it will definitely push prices up in the US, but the demand often tends to drop. Okay, so basically prices will be up and the demand won't match that price and they won't be looking to buy. And the third, and of course, most simply, is the inflation. It drives inflation up. Okay, so with that, it weakens the US economy, weakens the US dollar at the moment in this scenario of market, because the central bank's not hawkish, is neutral to dovish. It will be weakening the US. So again, my opinion is gold, Japanese yen, and Swiss franc. Forget about the US dollar at the moment. Okay, look at gold, Japanese yen, and Swiss franc. These are my takes from today, guys. I hope you could take out something from this video, because as I say, we're coming from a very volatile week. We're going again to a very volatile week. So hopefully you guys are doing well. And don't forget, today from 4 to 5 p.m. we're going to be having the webinar. The link to join the Telegram, where I send the link to the webinar, is on the description. And if you have any questions, bring tonight, this afternoon, or put down in the comments, that I will make some time to answer those. Thank you so much. Don't forget, thumbs up, subscribe to the channel, and I see you tonight or this afternoon, or see you in the next video. Bye bye.